guys. So this is the beginning of this live session, and the subject of today is how to follow positions. So I will be staying or waiting for you guys to come, and then we can begin our live session. So right now I see there is no one who is watching, so I should be waiting for a few minutes, and then we can begin um, speaking. So I see here four are watching. The year has begun so good, and the bull market is still there. So for 2 years right now, the market is good. As you can see, most of the sectors, industries are doing so good, especially these 2 years. And I have seen, I think in one of the comments, someone says I did not make money last year. It was strange because when there is a bull, you will find more opportunities to make money than when there is a bear, where you should short more. Okay, you do selling short, or you short by ETFs or something like that. But when it is like a bull market, you should just find good stocks in order to follow. Okay, so I should say hello. I see 4 people are watching, but they are hiding. They don't want to say anything, so I will say hello. At least they see that I am here and they are watching. So godless goddess, hello, how are you? Most of the time I see all my students and my followers on YouTube, but I'm just trying to wait a little bit better, because I know they will be coming after a few minutes. Okay, so as I told you, great, hoping to start training soon, still learning. Okay, thank you very much, godless goddess. Okay, it's you know, it's better to learn trading from the beginning. At least you will not get influenced by a lot of strategies, a lot of techniques, and then you get a mess, you know, and everything will be a problem for you. Thank you very much, Kerry David, and he say he is the first timer here. Thank you very much for coming. So I do this live only in I do this live on YouTube just only on Saturday's night at 11 p.m. Eastern time. Okay, just to know that it is Saturday, I will do the same. Okay, sometimes when I don't announce, it means I will not do, but most of Saturdays at night I will do this. Now this hello, wise man. You say I am late. Good evening. No, you are not late. We just began like 4 minutes ago. Okay, so you are always on time. No problem. And thank you very much, Kerry. Okay, so from the beginning, when people they learn the right way or getting training directly, okay, they will see everything, and they know everything, and they have the whole picture. Because when you want to trade, it is not just to search for stocks or to buy stocks. But there are other things like how to put stop loss, how to follow these stocks in order to make more money. Because we, what I do is what we call short-term trading. Short-term trading, or it is called swing trading. Just to make sure you understand, swing trading, if you have heard about it, it is just it has another name, short-term trading. They are the same, okay? So as you can see in the chat room, swing trading is the same as short-term trading. Now, when you buy a stock, we buy at the end of the day. At the end, like we search at 3 p.m., 3:30 or 3:45, 3 you begin to search, 3:30 through 45 you begin to go to your broker, you buy the stocks that you choose, and then you put stop loss, and that's it. Hello Artkov, how are you? Now Goddess, we most of the time here we do swing trading or short-term trading. Why? Because it doesn't need a lot of energy. It doesn't need to be in the morning, always in the morning, to check for your stocks and to follow the trades that you do. You should do a lot of things to be a day trader. But swing trader is easier for everybody, okay? That's why we are doing so much. Thank you, Baba Stock, how are you? Thank you very much, Godless Goddess, for your interest. And now I will explain, at least you have an idea, and then we can begin and explain what do I mean by how to follow positions. Okay, now in general, how to search. So I have my own criteria. It's only available for training for my students. Okay, so it's not public. So at 3 o'clock, you take the stock screener, you put 2 criteria, you search for stocks, and then there are other criteria. You see the best stocks in that day, because you can search every day if you need. But most of the people, you know, they have small accounts. Okay, each day we have opportunities to buy according to my criteria. Now what you do, you buy the stock or stocks, and then you put a stop loss. Anyone who doesn't know how to use it, there is training for that, no problem. Now, let's say in your just I give you an example. Okay, let's say in your account you have 4 positions. So I will go right now with the paint. Okay, so for you guys, okay, I'll go with the paint to draw things, so at least you will see what I'm saying. So please, if you see, I will change the screen right now. So do everybody see the screen right now, which is white screen, just to make sure, what's white screen. So do everybody see the white screen? At least I make sure. I will begin to explain. Yes, it's white, thank you very much. Yes, so I will just begin to explain. Let's say, just an example. Okay, let's say you have your trading account. Let's say there are $10,000. Just an example, okay? Let's say you divide this $10,000 to 4 positions. Now, when we say positions, we mean you bought 4 stocks, like 4 companies. This is what we mean by positions. Okay, so in your account you have $10,000. You do 4 positions. So if you want to know, so each position is $2,500. Let's say you are going to buy penny stocks, for example. So let's say I give you an example. Okay. So position 1, position 2, position 3, and position 4. Okay, these are your stocks. You bought 4 stocks. Okay, let's see here that you are looking. Okay, so you bought 4 stocks, and then let's say today is January 20. This is today. So you have January today. Let's say it is in the market. You bought the stocks, and you have 4 positions, and each position you buy $2,500. You buy whatever stocks you want. Like, let's say stocks that are penny stocks. Let's say it is $3 or $2 or 1 or 5. This is the penny stocks. Whatever is the price. So you divide $2,500 out of 3, and you find how many shares you buy. Then you buy another stock. You have $2,500. You try to divide it by 1, so you have 2,500 shares. Okay, it's like this. What does it mean? It means you keep the same amount of money. Don't change the money, but the shares, you will not get the same shares. Okay, because of their price. But the money, the position is $2,500. Now you ask me the question, for example, why we have 4 position or 3 or 5? This is depending on you. This is to limit the risk. If you have all your money in one position, your risk, you will be high. Okay, now we bought on the same day 4 stocks. 1, 2, 3, 4. Now if I ask you the question, do you know when you exit? So here, this is the time. This is the time. I ask you a question. Do you know where to exit? Or do you have, for example, what we call a price target or a percentage to exit the trade or to exit the position? Now, I told you many times in other videos and all that, for me, I don't have what we call price target. Like here, what we call price target, I don't have it. I will explain why. Because I'm doing longer trades, I don't have what we call price target. Okay, price target, it means, let's say, I just give you an example. This is $2. Let's say this is $5. This is $3, and this is $4. Now, in the future, since you buy at the end of the day, today, okay? Now, tomorrow, which is January 21st, let's say we are in the market. Let's say this is Monday, this is Tuesday, just an example, okay? So you will never know. So how do you follow your positions? This is what my session is about, okay? How to follow them. Now, let's say this position here is green. It means it goes up. This is a green, okay? This is a green. Sorry for handwriting and sorry for the spelling mistakes. Now this is red. Now what do I mean by this? Now green, it means next day the stock go up. green go up, green go up. It is a bull market, it's very good. But red, the stock has gone down. Okay? Now, let's say we go to the third day, which is 22nd. Okay? 22nd is the third day. Now, this is a green. Okay? Continue to be green, green, and green. But this is continue to be red. Now, let's say number 4 is the same thing. This is green and green, 3 days, which is very good, green. And here, since it is always red and red and red, and here we exit by stop loss because it reached our stop loss. Okay, it reached our stop loss. So this position number 4. So just to make sure you see it, this is position 4. It is red and red, it means the stock is going down, going down, going down, and then we exit by stop loss. As always, I told you always we put stop loss. So this is how do we exit? It reaches the stop loss, we exit. So you will have your money back, okay? And here, what did happen? Okay? Okay? Here, when you exit in the same day, when you exit, you buy in the same day. Let's say, I just give you an example. I just take this in order not to be mistaken with the thing. Okay? So, this is like, okay, say 20, 21, 22, 22, 23 January. Let's say it's 23 January, for example. Okay? And it is a green, 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 and this is exit. Now, when we exit by stop loss, what we should do here, I just try to make sure you understand. By stop loss, what we should do, we should go and search and buy another one. Buy. So you exit, and then you go search and buy for this one. But 1, 2, 3 positions are good. Okay? Let's say the next day, you buy it, it's a green. Now here we are 24. Let's say it is Tuesday. Let's say we begin, let's say this is a Monday, Tuesday, Wednesday, Thursday, and this is Friday. Let's say here it is red, here it is red, here it is green, here it is green. Okay? So you are still having 1, 2, 3, and 4 stocks. The same position that you begin with, you have the same ones. Although there is one that you exit and you buy. Now, this is how I do the whole year. This is the strategy, okay, of following stocks. Strategy of following the stocks. It means I am always in the market. Okay, so I am always in the market. I always own stocks in the market for the whole year. Okay, the whole year. So the whole year here. Now, this is just an explanation how I do follow stocks, and I will have always 1, 2, 3, 4 positions. Even though I exit a position, I will try to replace it. Okay, so this is in general how I do the thing. Oh, you said goddess. She says or he says. I don't know what's. It should be she. You rebuy on the red. No. I don't rebuy on the red. Okay. I will explain. I will continue explaining just to make sure you understand. It's not to rebuy. It's not to rebuy. Yes, it is to rebuy, but I exit the trade first. Number position. Let's say position 4. Just to give you an example. let's say the stock is called ZYS. This is the stock I own. Now when I exit, it means I exit this stock. I buy another one which is OTM, for example. Another, just an example. So yes, you said it is a rebuy, but it is a new buy. Okay, it is a new buy. Because this I lose it, it is a loser. So this one, the first stock, is a loser. Okay? So since it is a loser, I replace it in the same day. Let's say in the morning, let's say at 10 o'clock, 10 a.m., I exit the trade at 10 a.m. by stop loss. So I will replace it. Okay? So let's go to the normal thing. Okay? So thanks, godless goddess. Okay? Now, right now, do you have any questions about the way I follow stocks? What's the third and 5-step retracement? So what do you mean? No, here, no, I'm not explaining how to change a stop loss, because it is a training. I will not give a training here about it means how to follow the stock in terms of to stay. Now here, this strategy I'm showing you is I'm showing you what I do in the market to follow things and to stay always in the market the whole year. This is my intention. Okay, so but in order to follow the stocks, there are some techniques that I explain in my training. So I will not explain those training because it is part of the training. Okay, and I have stocks. I stay like the last stock I did one of the stocks like 5 months, 2 weeks. It means when the stock is going to stay longer in the trend. Okay, to stay longer in the trend, so I should just follow it. Now when I put my exit point, this is another thing. Okay, the exit point, it means when I have profits. So this is just an introduction to how I follow stocks and how I maintain this thing. Now for you guys, if you want to stay, how long do you wait to see? How long do you wait to see it downtrend? No, I have techniques to know where the stock is not giving any money. Okay, I know I have some techniques to show you. It's techniques that I use since 2010. Okay. It will show you clearly that this stock, the trend has ended. Okay, so Baba Stock says, as trader, should we consider gap up, especially when it comes to IPO? No, see, gap ups has nothing to do with IPO. It means the new company is going to the market. IPO is an IPO. Okay, gap up is a gap up. Let me explain first. I go to the whiteboard just to explain to you that there are a lot of people, they have misconceptions. It means something ideas wrong about the trend, because what is the thing we are doing? What is the thing we are doing in our strategy? It is to follow the trends, but you will never know how the trend will last. So for this thing, okay, because godless goddess says, how long do we wait to see it downtrending? So I will try to explain her how things work. Baba Stock said one IPO gap up after a few days. Baba stock, just wait. Just wait. I will explain to her because she has a question before you. I will explain to her and then I go to you explaining about the gap app. Okay? So let's go back to the thing for explanation, and I will try to clear all this up. Okay? I will clear all this up in order to explain the trends. Now, okay, we have the first position, the stock is going up, let's say here, it's going up, and then it stops. Then let's say this is the second one, this is the third one, and this is the fourth one. Okay, so these are our stocks. So number 2, number 3, number 4. Okay. Okay, I will take number 4 just to give you the explanation before that we lost this trade. So I will explain it clearly. Okay. Now the fourth position, as we said, as I explained, it's going down, and then we have what we call stop loss, and we exit. Stop. Okay, stop loss or loss. Sorry for making a lot of mess. So here the stock was going down, and then we have stop loss here, stop loss, and we exit. Stop loss, here we exit the trade, but the other trades we don't exit, as I told you. Now, try to see these 3 trends. One trend stops, let's say here, 2 weeks. The other, let's say 6 weeks. Okay, and this is 5 months. Now, it stops, and then we have a downtrend. This is just this is what the stocks mostly do in the stock market. Now we are following these 4 stocks. Let's say, just an example, okay? This in 2 trends, let's say we have $2,500 in this stock. Whatever we bought, whatever. This is just an example, okay? This is, let's say, $3,500, and this is, let's say, it is 5,000 we get from this stock. Okay, this is just an example, okay? And this, let's say we lost $300. Okay, this is the way I do always. My strategies is working with a lot of stocks always. I don't use only one stock and put all my money, because if you put all your money, let's say in number 4, and it was a loss, so this $300, 1, 2, 3 other stocks, you put them all the money here, it becomes how many? It becomes $1,200 loss. Let's say you put it in the wrong stock. So if you have 10,000 and you lose 1,200 just the beginning, so your 1,200, your account will be $8,800. So your account will be going so bad. This is so bad. So that's why I ask you, never put all your money in one stock. This is just a money management thing. Okay, so let's see. Hello, Bikes Night, how are you? So I'm trying just to continue and explain how long to wait. So there is no way to know how long to wait. Okay? Now what is the problem? Because you will never know where the trend ends. Okay? So this is the reason. Now there are some people I see some of my students, and some they try to comment, and they say, oh, we can have a price target. Okay, price target. This is price target. Price target as an example. Now price target is used more in day trading than in swing trading. Okay, for example, price target, you say I bought at $2. If it goes to $2.50, I will sell. I will sell at this price. But the stock, you stop here. Let's say you stop here. Just you decide. You say to yourself, I will put a price target. Okay? So the stock was 2, you bought it at 2 the first day, and in a few days, let's say 2 weeks, it goes to 250. So you sold it. Now, when you sold it, you use a technique which is called price target. Now, this technique is false. Okay? Just to explain. Why it is false? Because the stock, when you exit, it continues to go, let's say here, let's say to go to $4.50. And then it stops. Now, from $2 to $4.50, you have all this money that you leave in the table. So you leave on the table, it means you don't take all the trend money. So although your trade is good, you make money, but the problem is that you don't take the trend. And for us, what we are doing here in the market, we are what we call trend followers. It means we should follow the trend until its end, until it finishes. Now you ask me, this guy who sold his money by price target, he doesn't know how to follow the stock. That's why he used this technique, and this technique is false. And I explain to you why it is false, because when you exit early, you will never know where the stock will go in the future. Okay? So this is just one thing. Now this is another stock stays 6 weeks, another stocks 5 months. But the money, understand that the money, it depends. It doesn't mean that when you stay longer, very, very long, that you are getting more than someone who has 2 weeks or 1 week. No, this is false, because you will never know what you get. For us, we don't care how much we get. The main thing we do is we should finish the trend first. The stock has a strength. When it stops, it stops. Now, you tell me, for example, how do we know? These are techniques that are in my training. You can check, for example, training level 7, and you understand that, or you go to my subscription. Okay? So let's, hello, Bikes Night. I haven't seen you for long, and how are you, Tony Zied? This is, I think, a new guy here. Now, let's go back. I change this. Okay, so let's go back to the question of Baba stock, and he says, when the IPO gap after a few days, as traders, should we consider gap up, especially when it comes to IPO? Now, understand that gap up has nothing to do with IPOs. Okay, so I will explain the gap up for some people who might not have an idea. Okay, just to explain to you. So let's go to the thing here, and let's go and explain what is a gap up. So let's say the stock you bought you bought a stock at $20 here. The stock is going up, going up. Now here, one day, it was, let's say it was $25. And then there is good news, most of the time earning news, good news. Mostly it is earning news when the company announces the news for the quarter, okay? And if it is good news, you will see that there is a gap up. Here the candlestick, and you see this gap, and the stock can continue to go up or it can go down, okay? So it depends. So what you are asking is what we should do later. So there are techniques to know if the stock can continue its trend, okay, or it can go down, 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 and even you lose money if you stay in that trend. So this is techniques that we use in order to know what will happen to the market. Okay, so this is the explanation for the trends, and understand that you will never know how long will be the trend. So don't try to speculate, or don't try to pretend. What is Baba Stock said? What's best strategy for pennies? It's what I do. When you follow a stock, if it is penny stock or big stock, it's the same thing. There are some rules that you should follow, and these rules that I am explaining. Now, some rules I will not give you for free because it is training, but other rules in general, I'm trying to explain here how things work. If it is penny stocks or it is bigger stocks, it's the same. But understand that there are two kinds of penny stocks. I think most of you, when you think about penny stocks, you think about stocks that go too much. I will, Baba Stock, give me 1 minute, I drink some coffee, and then I will explain to you these two kinds. Because for me, I don't trade the pump and dump stocks scheme. I don't trade them. I trade the other thing. I trade the stocks that go slowly and they have trends that are penny stocks. Okay, I will show you right now. You should bring your coffee like me, and or you give tea, or you have soda, or you have something, because I will be staying long here, like 2 hours most of the time. Okay, let's go to show you, okay, the difference about these two kind of penny stocks. So we say here two kinds of penny stocks. This maybe if you have seen my YouTube channel for many years, you will understand this. But for the new guys who have never seen my channel or they are new, they would not know. Two kinds of penny stocks. We have one. Okay, we have one here that it is called pump and dump scheme penny stocks. Okay, and this is number one, and we have number two. Okay, here number two, normal penny stocks. And you say, what's this normal and what's this pump and dump scheme? Now, here is the example I give you. You find a stock that a stock, for example, let's say it is $2. This is the stock, and you see it in the chart, okay, like this, doing nothing for many months, nothing, okay. Here it is $2, here it is $2.01. So this stock is doing nothing, going up and down, up and down, up and down, and one day you see a big candlestick like this, or two like this. It goes to $6. So from $2 to $6, it is 300% of your money. It means if you put 10,000, you can get $30,000, or if you put 1,000, you can get $3,000. Now and then, most of the time, this stock will go down like this, and then it continues doing the thing, and here it is $2, the same as in the past. Now when you see this thing in the stock, this is what we call pump and dump scheme. It means this manipulation is done by some people. That's why it is called pump and dump. They push it up and they put it down. A lot of people, they make money from this, but most of the time this is manipulation. You will never know who are they or when this stock will go up, or this is kind of manipulation that happen in the market, okay? But some people, they follow it. This, if you want to follow this, you should do day trading. Day trading, you shouldn't do swing trading, except when you are in the stock, okay? You should do day trading. This is the first kind. So before we go to the second kind, I will ask you, do you have any questions? So Baba Stock says, they rise and drop and rise again, that's the time to buy. No, it's who tells you that they will rise and drop and then rise again? Who tells you? Okay, this is, I told you, this is manipulation. Sometimes they do it only in one stock, and it will never, all the years it will be the same. They can do it again when the people forget about this stock, because this is manipulation. It is something done by professional traders, and they do it in many stocks. So this is not normal. It's not normal trading. It's not. How can, for example, I will just show you something to understand this very well. For example, here, the last day here, when the stock is $2.01, the volume, for example, was 20K. It means 20,000 shares traded. But this day, it could be 5 million. How can a stock goes from 20K, it goes to 5 million volume just in a day? Now, the reason for that is manipulation, okay? There is manipulation. It's not normal. If there is a gap up, you find the stock that it is like there is a gap up. This is normal. Gap ups are normal to change the volume because they are because of the news. You know what did happen, okay? So if you want to know if it is manipulation or it is not manipulation, you should see the news and see why the stock has jumped like this. If you don't find anything in the news, it means it's manipulation. But if it is earnings, or this company has made major earnings news, has made money in 3 months, so much money, okay, you can have this. But if the stock will fall down again, it means it is just news. So it is just news, not manipulation. But if manipulation, it is another thing. So this is what we call pump and dump schemes, stocks, and I think you have seen a lot, and you wish that you were there before in order to get all this money. But you can get some of this money if you are a day trader, okay? In day trader, I will give you just a technique that you can do in order to find this stocks. Okay, you should in the morning, let's say just an example. Let's say at 9:30 when the market opens, you should search stocks. Okay, what is the criteria? Volume. Now you see the highest volume, it means that this stock is maybe a pump and dump scheme stock, because when the volume rises, the price will rise. The price will rise. Price rise because of the volume most of the time. And you check the stock. If you are a good trader, a day trader, and you know how to trade, okay, you should find these stocks and you should play with them. But they are very dangerous. They can go up very quick. They can go down very quick. Okay, so they can go up very quick, but also they can go down very quick. So you should know how to day trade, and you should have a broker that it is fast in terms of execution. Okay. So do you have any questions right now about this pump and dump scheme before we go to the common or the normal stocks that I always trade? Okay, and for me, I trade any kind of stock, whatever I like. It meets my criteria. Okay, I will buy it. Now the future, no one knows the future, so I don't predict. I don't say that this stock will go up or go down, so I leave it for prediction. Okay, so does anyone have another question about this pump and dump scheme? Maybe you have seen a lot of stocks like this and you wish to be there, but understand you can be there, you can make money, but you can lose a lot of money also, because these stocks, they move too fast. In a few seconds, a stock can go from $2, it can go to $4. But understand that in a few seconds, a stock from $2, it can go to $1 or to 50 cents or wherever it goes. So always, if you want to play with these stocks to be like a specialty for you to do day trading and to do these stocks, you should stay months and many years studying these stocks, studying these manipulators, and you come up with a strategy that you can make money from it. But it's not easy. Okay, don't see the stock goes from $1 it goes to $5, and you think that it is the whole day going up. No, sometimes from $1 it goes to $5 in a few seconds when the market opens. It's over. It has already begun. It has already gone to $5. It's not that the stock has been going on $5. I will just show you again. Okay. Show you again with pump dump scheme. Now, I will erase those that we don't need them. And okay, let's say here you see, for example, it's 9:30 a.m. in the morning. Okay, what you see a very long, just the first minute like this, a very long candlestick, and the stock, it opens at $1, it goes to $5 in 1 minute. What does it mean? It means those people who bought this stock, they bought it before, let's say today is 21st of, let's say it's 21st January, just an example, okay? Now the people, they have bought this stock, let's say in the 20th of January. Today is 21st. Now in this day, they bought a lot of shares, thousands of shares, and because they are manipulators, and they ask people to buy, so it goes from $1, it goes to $5. But this is just because there are thousands of people, they put orders at the open. This is called orders at the open. It means they know something. It means someone sent them an email or sent them a newsletter saying, okay, buy this stock. So the stock, $1, it goes to $5. Now the problem is that, okay, just to give you an idea, these guys who bought at $1, when the stock reaches $5, what they do here, the second minute, okay, let's say they don't buy, they don't sell that minute. They begin to sell, for example, and the stock will be going down, okay, the whole day until maybe it reaches $1 again. Now this is at 4 p.m. This is when we have only one day manipulation. It could be they go like this, the next day $4 or $2 or $1, but sometimes it goes so quick that it happened in one day, or in 2 minutes or 3 we have a big candlestick, and the second minute we have another green candle or red candlestick, and the stock will be $1 more another time. So this is the kind of manipulation. But the good thing here is, let's say a stock, okay, at 9:30, let's say it was $1, and let's say it goes here $1.10, and then the stock will be going up like this, until it reach $5. Now these stocks are very good if you can find them, but they are rare, okay? It means the whole day, it means you are holding, you buy at the beginning and you see the stock is going up, you buy, and you just follow the trend of the day. And let's say it's manipulation, but it is a slow manipulation. But most of the time, the stocks doesn't go like this. Okay, it doesn't go because the manipulators, what they do, they want to get their money at the beginning. They don't want to stay the whole day, because the more you stay, the more the people, they make money, they sell, they make money, they sell, they make money, they sell. So it will not be very good for them. Okay, this is just an idea how things work. And if you are going to do this pump and dump schemes, penny stocks, you should specialize in them. Okay, you should specialize, and you should let's say you have time in the morning, either you are retired or you work in the afternoon or at night, and you have time to trade this in the morning. It's a good idea to do them if you want, but these stocks are risky. Okay, so these stocks, as I told you, they are risky. So right now, do you have any question about this what we call pump and dump schemes? If you don't have any question, I will go to the stocks that I am following myself. Okay, since I am not doing day trading, I don't want to wake in the morning and to to search for the news, to see the volume, to search, to be with other guys fighting in the morning. For me, I don't do that. So for me, I do the easiest thing and with less stress, and you can make a lot of money from it without going into the three to the morning thing. So I will just give you an idea how I work with this kind of stocks. So let's see. Okay, so the second one, let's take the first one out of the screen. These are called normal penny stocks. I will give you an example. Okay, let's say today is 20 January, just an example. Now, today here is the candlestick I buy. The stock is $2.25. Okay, this is the candlestick I bought, and the stock is going up like this. It goes to $5, let's say, in 2 months. Okay, now what is the difference between these normal penny stocks and the other ones? Although you can get this $5 after 2 months if the stock has a trend. Okay, a trend, it means there are a lot of people that are buying, and when they discover the stock, they buy. All these guys are what we call swing traders. It means they like to see the trend. So one buys here, for example, let's say I buy here, which is from the beginning. Some people buy here, other buy here, other buy here, here, whatever is the price, the people are always buying. Don't say why the people are buying. They are buying for many reasons. There are some, for example, some forums, let's say forums, okay, or some chat rooms, okay, chat rooms, or some website, or any other means, or the media like Facebook, let's say Facebook or Twitter or any social media, and there is someone who said, oh, okay, XYZ is a good stock, buy it. So beginners, since they don't know what to do or how to trade, they just jump, let's say they buy it here. Now this, it's maybe the end of the trade. Now they just buy, and then the stock will go down to $1 here. It was $2. It was so $2.25. It was very good. It goes for 2 months. It goes to 5, and then from 5 it goes to $1. Let's say into 1 month. If you hold the stock and you don't know, if you hold the stock and you don't know how to exit on time, you will have a big loss. Okay, and that's why my suggestion always, you should train yourself or get a training and never just do what other people ask you to do in terms of buying stocks. Okay, these are called, let's say, they are called tips. Okay, someone says, I will give you a tip, buy this stock. Okay, why should I buy it? What's the thing? What's the reason? Okay, what's the reason? Because here, this guy who tells you to buy the stock, he doesn't show you why. It means he doesn't teach you anything. And this is the problem. Now, for us, like a swing trader, I don't rely on forums, chat rooms, websites, Facebook. I do it by myself because I have my own strategy and I'm teaching it. So the thing is, here, the thing is, I always buy and sell according to my criteria. Okay? Now, for me, I should always think to buy from the beginning. Now you ask me, for example, what is this beginning, the start? What is it? Okay, this is the criteria I'm teaching. This is the criteria, and in order to follow the stock, it is the other training. Okay, the other training that I have in general. So this is in general how do we follow these trends. Either it is a penny stock, or it is a normal stock, or it is a big stock. All the stocks move. If they move with the trend, it means there is a trend. Now, if you follow trends, you will get almost all the money in that trend. It could be 50%, it could be 100%, 200%, 300%, depending on the stock itself and how much it gives. And this is the easiest way to make money, is to follow the trends, but not to invest. Okay, so try to understand that swing trading is not an investing vehicle. It means you should never invest using swing trading techniques, because you can use swing trading techniques to buy or to exit. It's okay, but if you invest, it means you should stay or hold for more than 1 year, and this is not what we are what we are doing. So let's go back and explain to you this idea. At least you will have an idea about this. Okay, so in terms of investing in stock, okay, let's say you bought a stock here at $15. Now, investing, when you want to invest, you should see the company, okay, competition and the other thing. I'm not going to give you all the information about investing, but this is, let's say, 1 year here, 1 year. This is 2 years. This is 3 years. Okay, these are the years. Now the stock can go up to 25 in the first year, but it can go down to $7 in the second year. Okay, it can go to, let's say, $9 in the third year. Okay, so investing is you risk. Your risk is big, so it means you have a big risk. Okay, since the stock was going down from 25, it goes to 7 in the second year. You did not exit, and why you didn't exit? Because you are investing. You are looking always for the company, fundamentals, for the competition, and they told you always that the company is good. That's why you are staying until you lose your shirt. Okay, this is how investing. Sometimes investing from 25, it goes up. Let's say it goes to 60 in 3 years. So you are making a lot of money. So it depends how things go for your investment. Okay, so that's the main thing I'm explaining. Okay, so as I told you, most of the time we go back to our subject, which is how to to follow positions. So I said to you always, when you buy a stock, either you exit with a stop loss, or with what we call exit point. Okay, when you do exit point, whenever you exit the same day, you should buy another stock. I have explained this, but I will just make it clear how this thing will work, because I explained in the beginning of the session. Okay, so let's say here, so you have a stock at $20. Okay, the stock is going up. Okay, and then it's going down, and this is what we call exit point. Exit point, it's like the stop loss, but it's not a loss here, because here I will just show you with these lines. Okay, this is the stop loss, the first initial stop loss. Okay, let's write it, because my handwriting is bad with this thing. Let's take this thing. Okay, so initial stop loss. Okay, it means whenever you buy a stock, let's say you bought it here. Let's say you bought it here at $20. This is where you bought. Let's say we give the stop loss. Let's say $19 is the stop loss. This is the initial stop loss. But later you should change the stop loss. And whenever you see the stocks going down, this stop loss is called the exit point. Now, you should not, when the stock is going up, you should never stop it. This technique is false. To stop it, to say, for example, price target. This is what I explained at the beginning of this session. Price target. You say, for example, to yourself. Here what you say to yourself. You say, I bought the stock at 20. If it goes to 30, I am out. This is the price target. I'm out. I exit. I made 50% of profit. But the problem is that $20, it goes to $30 here. But here it goes, let's say, $60 in 3 months. Now I ask you the question: are you going to stay for $60? Okay, and to get not just 50%, but to get, let's say, 300%. This is just an example, okay? 300%. Are you going to buy at to sell at 60 when the stock is going down at 300%? It means now here, let's say you buy $10,000, okay, of this position, and you will get $5,000 as profit. But here at 60, how much you get? You buy by 10, so you will get 30K in this position. So you are making $40,000 in this trade. So you see how things work for following the trend, and this is why some people at the end of the year they make money, and others they lose money. Okay, this is something. It's just if you don't finish the trend, you are having all this money, just leaving it on the table, and you don't take profit of the trend. So trend following is a serious business. You can have a lot of money, and it is better than investing, because when the stock is going down, you don't continue to hold when the stock is going down, because you are not investing in the stock. That's why it is called swing trading or short-term trading, and it is not what we call it is not what we call investing thing. And a lot of people they do mistakes, and these mistakes what will make them is that in the future they always can make a lot of money, but because they don't know how to deal with the stock, they exit the trend because they are scared, and because when they see, they see $1,000, $2,000, and they have small account, they think it's a lot of money, but they don't see the trend itself. Has it finished yet or no? These, as I told you, there are a lot of techniques that we can use, and this is what I teach in general, and this is how we make our money as swing traders or short-term traders. Okay, we are not doing day trading. It means the morning you do day trading. You do one trade or two each day, depending on how much money you have and depending what you do in the market. So for the what we call swing traders are better. They are in the middle, okay, between investing and between day trading. And if you have a job, you do swing trading is better for you. Either if you do part-time job, swing trading is better for you than investing. Okay, so is there any question? Please ask. Okay, since I am still continuing to explain. So today I see not a lot of questions like last time, but it's okay. It's okay. I'm trying just to explain as much as I can. So if any one of you guys have some other questions, you can just ask before I continue to another subject. So to continue our session, okay, let's go and try to explain something about positions. Is that you should not, in general. Sometimes, for example, one guy before. He has, let's say, he has 25,000. This is his account. Okay, 25,000, and he has 22 positions, 22 stocks. It means he owns at the time. He's doing okay. 22 positions. Now, my question is, do you think that this let's go here. Do you think that this 22 positions is right for this type of account? So 25,000 account, this is his account, and he has 22 positions. So my question is for you, is it right to have, let's say, 22 positions for $25,000 dollars? Let's say you are doing penny stocks. Just an example, okay? I want just to see your opinion about this. At least I can explain and think. So Baba said, those people who short that penny, that they have to cover. So penny stock will rise after dropping. Doesn't matter 5 cents or more. That place you have to watch. No, people they. Baba, people most of the time they bought before, so they don't short. Sometimes they just sell their shares they own. Okay, so you should understand the situation. The people they have already bought in the morning, bought before, let's say the previous day. So because they are doing manipulation, they are not trading for real. They trade, but they trade because they have they trade using manipulation of the stocks, because you can't do manipulation. Let's say you go to Facebook or Twitter or something, you can't do manipulation there, because the stock is, you should have billions of dollars and billions to try to do manipulation, and you should have millions of people to buy under your hand in order to do this kind of manipulation. That's why this manipulation happens only in small stocks with a small volume. Now when you say they short these stocks, yes, you can short these stocks where the guys are selling, but other people are selling also, so the stock will go so fast down. Now for here, Baba stock, I am not here explaining details of the trading, how to do the trading or how to do the day trading, because this is what we call, this is a training like how to day trade or how to sell short. This is something which is specific. It means you should know what you are doing and understand that in penny stocks, when you are shorting, okay, I give you an example, okay, I give you an example. Shorting penny stock is a real risk. I will give you an example in order to let you understand this, okay? But before I give you the example of the risk you will have when you're doing this short selling, let's continue with my question. You have 25,000K, it means $25,000, and you do 22 positions. Now I just told you, the question is that right, yes or no? Okay? So although you are free to do whatever you want, it's your account, you do 22 or you do 100 or you buy 5 or you buy 6, it doesn't matter because it is your account. But in terms of thing, if you do 22 position, understand that if you buy them and then you sold them, so 22 positions multiply by 2, you have 44 transactions. What you do with your broker? Okay, 44 transactions, and this you should multiply it by commission, and this is here the problem. Okay, you multiply by commission, it means you will be losing. Okay, you will be losing a lot of money from this kind of, let's say in 1 week you bought 22 positions. Let's say in the same week you sold them, or 2 weeks. Now this will make you pay a lot of commissions. Okay, and this is too bad. If you are holding like an investment for the long run, even for the long run is too much, like 22 positions, it's too much. Okay, so you try to minimize them and try to have adequate positions according to your risk. This is the main thing. Okay, so let's go to the let's say here. Let's say we go to the question of Baba stock about shorting a penny stock. I told you before that be careful. I have never shorted a penny stock because of the risk. Now you have an idea that shorting, you just short and you just make money, but sometimes you will have a real problem. So I will make you an example to understand short selling risk. Let's say you bought the stock at $2. No, the stock is $1. This is the beginning of the day. Let's say 9:30. Okay. Now the stock has gone to $3. Let's say the time it is 10:30. This is the time. Okay? And then the stock begins to go down. Okay? Let's say it goes to 275. Now, you see that the stock is going down, so you have the idea to short the stock. Okay? Now, whenever you go here short, let's say you put $3,000, you buy shares, it means you sell them short at $2.75. And you think that the stock will continue to go down in order to make money. Okay? So this is your reason to short in order to make money when the stock goes down. Let's say someone, he comes with $50,000 and he buys the stock. He thinks that the stock is going down. Now he wants to buy, maybe it will go up. And since his money is bigger than your money, you have spent only $3,000, okay? And there are a lot of people who don't know how to short, so you are just few people who short. Now this guy with $50,000, he buys here. Now the stock from being red, it will go up, and it goes to $6. Now in 1 minute, this is not something that you think that it will take. They give you a chance to get out from this stock. Now, if you buy at $2.75, after 1 minute it is $6. You don't know where the stock is going, so you have to buy the stock back in order to give the shares to your broker. Okay? So tell me here, how much you lose? Now let's say it's $2. At least we'll make it easy for you to understand. $2, it goes to $6. So you have lost your $3,000 and you need to bring $6,000 now. And sometimes they don't let you cover back because the stock is still going up, because other people they come, it's coming, and the stock is going up more and more from 6 to 7 to 8. Okay? And what will happen? Let's say you succeed to exit at $6. Your $3,000 has gone, and you should bring $6,000 to your broker. He will call you right away and send you an email. He say you should bring me the $6,000 that you lost. Okay, so just to make sure you understand that I have training about short selling. Before you see the techniques of short selling, you should see the risk, because a lot of people, especially beginners, they think about the money, okay, but they don't think about the risk. That's why for me, most of the time, 99.99, I don't short stocks. Okay? In order to short the stocks, you should see a stock or a company that has problems and the stock is going down and you go for long. Okay, you go for long, and if the stock is going down and down and down, you will be making money. Okay, so this is what the people do for long investment, like for 1 year, 2 years, 3 years. They see that the company is doing bad. Let's say if you check, for example, Sears or other companies that they lose a lot of business. Okay, you see that in the chart. They are losing each time business, and you want to do that. But understand that short selling is for advanced students who know what they are doing. Because if you do a mistake or you buy a stock, especially penny stocks, you should, I'm telling you, you should avoid penny stocks short selling. Because I just showed you. Okay? I will give you, why I always give you the bad side. It's just because if you don't know your risk, you will never be a true trader. You put $3,000 in this stock. The stock, you want to short it, but there is no other friends or other people in the market to short the stock, and the stock is going up to $6. Let's say you have a big position, you have $10,000. So a lot of beginners who begin to play with short selling, and they say, oh, it's just easy, it's just you go and you sell short, but they don't understand the risk. And if you continue to play without knowing how much risk, this will be a very bad thing for you. But in the other things, if you go long and the stock goes down, whatever it goes down, you will never see problems like short selling. Short selling is a real problem for beginners. So for me, if you are a beginner, try just to avoid short selling. Try to not to use it in swing trading at all. Use only going long for stocks. And if you succeed 1 time or 2 times or 3 times to do so, to make money, little money like this, but understand that if you have what we call short squeeze, it means when you get squeezed and you can't buy again because there is a lot of people that buy, because it is just penny stocks is just a bull in a few minutes, or sometimes it is 1 day, few hours. It's just a bull that comes and it will never stay. Okay, and never buy or short a stock and leave it for tomorrow. Okay, you will never know what will happen tomorrow. Maybe there are news. Maybe there is a big buyer who just play, because there are a lot of rich people, especially rich people. They have a lot of millions of dollars. They go and they play with this because they have a lot of money. They don't care. Okay, but people who just are trading, they have a little account, very small account, and they play with the big. Sometimes they lose too much. But what I propose as an alternative, okay, I will just show you again. For my strategies is concerned, okay, for my strategies, I don't go with these stocks. I go only with the stocks whatever is the price. Let's say here the price is $3, okay, and you will follow this stock. It's going up. Let's say here it goes to $6. Let's say in 3 months. This is the kind of stocks I am looking for. Now what I'm looking for is the trend. This is the stocks, and some stocks, they have not been doing nothing in the past, or they've been going down, then they go up. Okay, so this is the stocks, this is the trends I am following. It could be 3 months, it could be 1 month, it could be 6 months, it could be whatever time, but you understand that you are making money And even if the stock, let's say $6 here, it's going down, it doesn't go down like this. Most of the time, this kind of stocks, if there is a reason they go down, okay, you will see that these stocks, as they go slowly, they can go down slowly also, okay, and you can exit at any time you want. But the most important thing is to follow the trend. Either it is $3 or it is $300, it goes to $600. It's the same thing. The same thing for penny stocks. The same thing for any stock that you want to trade. Is it big stock or small stock? It doesn't matter. What it matters is the trends. Is there trends? Yes or no? If the stock doesn't trend and just go up a little bit, go down, so this is not what we are looking for. Okay? So Baba has another question. If an IPO crossed the resistance of the first day, it's a buy according to you? No. No. I don't trade, I don't do like this. For me, most of the time, if I want to do day trading, I should trade the day. Because if the stock today, this is Baba what he wants to say. Let's explain what he wants to say. Okay? Let's give you an example what he wants to say. Let's say today we have a new IPO. IPO, it means it is an initial public offering. It means it is a new company. Today, let's say today is this. Okay? This is the open at, let's say at 9:30 a.m. The stock, let's say it begins at $7. Just an example. It goes down in the morning, just when it opens, it goes down to $6.85. This is the low of the day, low. Then it continues to go the whole day because it's green, the whole day until it reaches from 7, let's say it reached $9 at 1 p.m. and then it closed at, since it is $9, let's say 8.50. Now this is one day, okay, day 1. Now the day 2, you will never know when it begins. So for example, he said, oh, what is, I take the resistance line here, if it goes more than 9, I buy. But yes, the stock can go to 9, okay, in the morning, but it can go down at the end of the day and it goes to $6. You will never know what the stock will be doing. So are you going to do day trading or swing trading? If you are day trading, you should know the techniques in the morning. And this is the techniques I show in training level 12, how to day trade. I show you these kind of techniques, what you should do in order to search, in order to know how to do day trading, which is training level 12. Okay? So, but there's no way, I don't buy like this. I buy when, if I want to buy like a swing trading, I should see the chart like this, for example. Okay. I should see the trend, okay? I should see the trend like this in order to, let's say it is $20, here it is 25, okay? I should see the chart and put my criteria on it and see the chart and then I decide to buy according to my criteria. Okay, so there should be some days or a few days or few weeks. Okay, it could be days, it could be weeks, it could be months, and it could be years. It doesn't matter for me. Days, weeks, months, or years, it doesn't matter. What it matters is the chart and my criteria. This is what it matters for me. Okay? So this is what it matters in general for me. So it has nothing to do with resistance line or support line, or you should have the criteria. You should know where to buy price. Okay, so for me, I should see the chart, and I don't buy from the first day, because the first day it could be good, it could be bad, but the next day I don't predict. If I want to do day trading, yes, I will have my setup in the morning and try to see in the morning where the stock is going. Is it going up or going down? This is a day trade techniques that you can have in training level 12. But for me, since I am not, sometimes I do day trade, but I do day trade in the first day of the IPO. I will tell you it's very, very dangerous, but I will do that because I have some techniques to use in the first day. Hey, Rahmatullah, Modi, how are you? So we have begun at 11 p.m. You are late, but it's okay. So how are you doing, Rahmatullah? Now, as I told you, thank you very much. We have been here for 1 hour 36 minutes. Most of the time I do 2 hours, depending on the session. So, as I told you, when I buy stocks, I buy them because of my criteria. It could be days, it could be weeks, it could be months, sometimes even years. Okay, sometimes it is years. Hey Rahmatullah, I know you forgot, but you can watch the live as you later tomorrow, or you can just watch it tomorrow, or come next week earlier than this, because you will see everything. I have explained a lot of things, Rahmatullah, if you want to check it, what I explained, which is very, very good. Now, as I told you before, you should have techniques separately for day trading, swing trading, and investing. You shouldn't mix those techniques, because it's totally different. Okay, so as the beginning of this session, I have been explaining these following positions. If you have many positions, hello to Balkane, good morning from Riyadh. Sorry for being late, Mastro. Okay, no problem. You can just watch it tomorrow, if God wills. You can watch it when the video is done. You can just watch it again or see what we have talked about. No problem. So it's just sometimes I do the same on each Saturday, 11 p.m. But sometimes I don't do, depending on my time availability and so on. So the subject of today was how to follow mini positions and what to do. Now here I'm just explaining the way I do. What in inverse ETF? Inverse ETF, it means when the sector is down, the ETF go up. When the sector is going up, the ETF is going down. It means it does the opposite. I have I think training uh, how to short the whole market. This is the training I did about inverse ETFs. So let's see what is it called, which training. Yes, how to, it's training level 12. Okay, so if you are interested, you can just check this. It's called how to short the whole market or index or sector. Okay, this is the, if let's say if the stock market crash and we have a big downtrend in the future, let's say it is in the future, so this training is very helpful. It shows you indexes, it shows you the whole market indexes and what to do in order to take advantage of this thing. When you buy them, if the stock market is going down, these inverse ETFs, they will be going up and you can make money. Okay, so it's just a way to do without shorting. It means here, when you take this training, it means without shorting in real. Okay, without shorting. It means you are not asking your broker, to lend you some shares from a stock. Okay, so what you do, I will just give you an idea here. If you are interested about this, okay, let's say show you this training. What does it do? Okay, so let's say you have right now, let's say the Dow is going up like this. An example. Let's say there is a downtrend. Now, when there is a downtrend, you can buy an inverse ETF, okay? And where the Dow goes down, you buy this ETF, and your ETF will be going long. Okay, it will be doing good, and you can make money. But if the index is going up, your ETF will be going down. So it does the opposite. But it is a stock, okay? It is an ETF. It is a stock. You can buy it, you can sell it, you can. It's not like shorting the stock. So you don't borrow shares from your broker. It is a stock. Let's say STM. Let's say this STM is ETF. It's like a stock. You buy it. If the index is going down, your stock, it's going up. This is just techniques, and these techniques I show in training level 18, and I will show you how to find these indexes, when to exactly begin to buy these ETFs. There is a lot of stuff to be aware of before you do this thing. Okay, so because it is like a stock, it means if the trend reverses, you will be losing money. It's like any stock that you buy. So there is no guarantee whatsoever when you buy something. Okay, but in general, wherever you order a training, it gives you more details about what you do. At least you have the general idea. Okay, so all my training are very direct. It means they show you something directly and you begin to learn. It's not like just theory or just something ideas or something like that. Okay, so the stock market has been going so good, especially these 2 years, and um, it might collapse at any time. Okay, when it collapses, most of the stocks will go down. So most of them, but not all of them. Penny stocks, you can find always the stocks because they don't belong to any industry, because you know they are manipulated. Can we buy stocks that perform well in recession like Walmart? Who tells you? Who tells you that Walmart has done good in recession? In recession, Walmart has done nothing for years. So in order to understand, I will show you. Let's see. I will show you. Walmart was doing nothing for many years. So let's. I will just try to see the chart, and I will show you. Since you are speaking about Walmart, let's go in a few minutes. Let's go to the chart, and I will show you something. Okay. Let's search for the chart. Okay. Let's say we take the monthly. Okay, this is the chart. Please follow me with the chart right now. Okay, please follow the chart. I will explain. Now, this is Walmart, and this is a monthly. It means we see the month. Understand that Walmart from December 31st, it means December 99, until June 2012, it has done nothing. So if you, for example, let's say you bought Walmart stock at $69 in December 99. Now we have 17 years. Now we're under 18. Okay, let's say 17 years Walmart has done nothing, because in this date, which is June 2012, for 12 years, it is 69, the same as in 1999. So you see that? So all this period that you see here, which is 12 years, Walmart has done nothing. Now let's see what's the Dow Jones. What does it do? Okay, let's say Dow Jones. We try to have the same. Okay. Let's say it's here, as you can see, and let's see the June 2012. Okay, let's say here June 2012. Okay, so you can see the Dow Jones is the same. It has done nothing from 2000 to 2012 in June. These kind of stocks here, they have done nothing. It means you will not have been making mostly any money. Okay, The only thing is, after 2012, you see this big trend here. This is what the people are looking for in trends, a trend like this. Okay, it's going up, going up, going up. This is what the people are, from 2012 in June to now, this is the big trend. So there are some periods, like this 12 years, the stocks have been doing nothing, okay, for this Walmart or for this thing. So don't say it is a recession, Walmart will be doing better. You should compare it with the industry that it is in. Okay? So, since you talked about Facebook a lot, if Facebook drops 10 points, is it a buy? Okay, I don't see. You are just giving what we call Baba stock. This is called generalizations. Okay, generalizations. It means if something falls 10 points or 10 or 10, why you say 10 points? The Facebook can drop 30 points or 50 points in 1 month or 2 or 6 months. How do you know that it is 10 points or 5 or 6? So if you want to know, yes, it has a trend. Now let's give you no, it's not a billion a day. It could be 5 billion, 10 billion, depending on the volume. It could be many billions dollars changed a day. Okay, so let's go to the chart again, and I will show you, for example, Facebook. Okay, let's take the daily. Okay. The stock was 187. It goes to 187. Ah, yes, this is you are looking for this because the stock has going down and then you buy. But now I will give you an example. Okay, so when you buy, it doesn't mean that the stock will continue going up until 200, 300, and it doesn't mean that it will go down. So it's up to your strategy, okay, that you are going to do. Now, if you are buying from the support line from down, you can check my training number 13. I have done it with the Twitter, and if you are interested, I have done with Twitter before, and the trade is live for 2 months, and I did it live. It means each week I make videos, and it is in my training level 7 or the subscription. You will find there. You will find the trade live. It means you will find the trade. Yes, it means if you want just to see how I do. Yes, thank you very much, Baba. It means you will understand why. This is the most important thing to learn from me. Is when I explain the videos, is to find the reasons why I buy at this, what is my criteria, how I follow the stock, what should I do. And now Baba stock, I am in another stock live. I have begun like I don't know how many weeks, 1 week or 2 or 3. I am still in another stock live, and I don't know if it goes good or bad. So it is for the golden subscription. You find it only in the gold subscription, because I don't put live that it is live for now. in other subscription. I put it only in the live for the golden subscription. And there is a stock I'm following right now, and each week I make a video and I explain. So as I told you, for me, I have clear ideas about the strategy. It is when I buy something, it should meet my criteria. Okay? And second thing, if the stock doesn't work, I exit with a stop loss. Okay? So this maybe some people you should understand what we call probabilities. I buy a stock, I put stop loss. If it works, I stay. If it doesn't work, I exit with a stop loss. So this is the deal. It means it's always about probabilities, as I have shown you in the positions, and I told you that each position you sell, you should replace it the same day. Okay, if you have enough money to do it. If you have just little money, it will be impossible to buy at the thing. Okay, so you should always follow the rules, follow the instructions in order to be a better trader. And this is what I am doing. It means I'm trying to explain to you the most of what you can get when you are doing stock trading. It means it's like things that you should follow, okay? Things that you should follow and take advantage of the rules and instructions, and they are very easy. It can be applied on any stock. There is no stock that it is an exception, okay? Except for penny stocks that have pump and dump schemes. We should have another strategy to deal with them. You can't use my strategy for pump and dump scheme because it is a day trading strategy. You should go to trading about 12 and you do such thing. Okay, so we are at 1 hour 56. We are at the end of the session. Please, if you have questions about this session or any other question, I will be happy to answer you before we end this session. So as I told you, the thing about stocks, it means there are some stocks they trend and we should follow them, and there are other stocks they don't trend. Kerry Madivid, he say won't let me. Who will not let you? What's the thing you are asking about? Because I don't understand what's your question. Hey Kerry, could you explain what you wrote? You wrote won't let me. Franklin, how are you, Franklin? Gires, you see Digas. They won't let you? You just write your question. As you have written right now, ask a question. You have just written. So you just write as you do. Why does it won't let you? You have just write, ask a question. So you okay. But I see what you are writing. So you do the same. I see now you say yeah when I type it out 1 cent. But it is you have sent it. You have sent this sentence and you have sent the second sentence. Okay? So I see what you have written. Just try to do the same. Or click on the chat room, click on it and then click okay. Just send it piece by piece or words. I don't know about this chart. It's just YouTube chart. I have no idea about how it works. But just write it piece by piece or whatever. Or if you have special questions, you can always send me an email. Okay, and this is my direct website. Okay, just to make sure. Yes, just write. Or if you want to send me a private message because you have some private message, you can do this. You can send me an email, istockmoney@yahoo.com, or you can go to my website and just check whatever you want to check. Okay? So you can just type small and as you told me, and you send me your question. Okay? So thank you very much for watching, and more people, they come at the end. I see 16 right now, so it's okay. So if you have questions about what we have seen, can you follow trend with the price of the stock you buy it at? For example, if I buy it for $1, then a month it goes to $5. That's an uptrend. Yes, yes. This is what I was explaining. This is my strategy. Okay, but understand that from 1 to 5, it can go to $2. I will just show you by explanation. Please watch. Okay, please watch the explanation. Okay, here is the deal. Now here the stock is $1. You bought it, so you will never know where it goes. It can go at here, it stops, and then here it stops, and here. It's just an example. So let's say a stock goes here to $2 and then it goes down to 0.75. Okay, so where are you going to stop? This is what I teach. I teach you how to follow the trend and to know if the stock is going down, yes or no. Which criteria did you use in order to understand this? But the stock can go down and it can go up again, and it can continue to $5. Okay, it can go that like this. But these techniques of knowing when to exit on time, this is what I do in training level 7. Training level 7, it is how sorry for that. It is how to follow an uptrend. Okay, this is just how to follow an uptrend. This is training level 7. It shows you how to deal with that and how to change the stop loss. Okay, now you put stop loss, let's say here, this is a stop loss, and then where you change this stop loss to become the exit point. Exit point is where you exit with profits. Exit points, okay? Whenever you follow, you should know where to exit. All this stuff is taught in training level 7. Okay, just to give you an idea. Cause that graph can be confusing sometimes. Yes, it is confusing. Now, why it is confusing? Because you don't know what are the criteria to follow the stock. Okay? So, if you go, for example, to training level 7 in my website, you will find a stock of 5 months and 2 weeks. I will show you and it's live. Each week I make a video live, and I will show you what to do in order to stay in it. So I stay in this stock 5 months and 2 weeks. Now, in order to do like I do, you should understand my criteria and my techniques. You can do it by yourself. You can always be mistaken and you don't know what to do. Okay? So Rahmatullah said, if I buy stock and it doesn't move, what should I do? Should I wait or exit? Okay, this is a good question. So let's talk to Rahmatullah question, and I will answer that question before I go to other questions. Okay? So his question is, if I buy stock and it doesn't move, what should I do? So let's explain and give him an answer for this. Okay? So let's say here, this is the point where you bought the stock. It was $55. Now this is where you bought the stock. This is the candlestick, the green candlestick you bought the stock at. Now let's say you put stop loss at 23.50 cents. This is your stop loss. Stop loss. Okay. This green line, it means where you bought. This is the red line. It means sometimes the stock, okay, it goes up, it goes down, it goes up, it goes down, doing like this. So here it's up to you. It's up to you. Let's say it didn't reach 23.50 and it's swinging like this. Now here it's up to you. If it is too long, like 2 weeks, 3 weeks, or 1 month, and you get fed up with this stock, you can just exit the stock. Or you can stay until you see a new price. Either it touches your stop loss, it goes down and you exit, or it can go down up and you make money. So this is what I do. But for me, I will show you for me what I do. Okay? For me, let's say I bought the stock here at $25, an example. Let's say I put the same thing, let's say I put stop loss at 23.50. So what is how I deal with the stock? For me, I leave the stock, okay, and I don't exit. This is what I do always. Almost of the time, 99.99, I leave the stock and I don't exit. Okay, and if the stock, let's say, goes up and down, and one time it touches here after 1 month or two, I just exit. Because here is the thing. Why I don't exit at the first time is that sometimes the stock goes up and down, and one time it goes up. This is the thing that I am explaining. Sometimes you stay like here, and the stock decided to go up. So I am good. As you can see, I am good. Now you tell me, but what if the stock has gone down and it hits your stop loss? Now for me, I assess my risk. It means I am okay with my risk if I lose that kind of money. Okay? So from 23.50 to 25, okay? It's $1.50 in each share I bought. This is the loss. It means $100.50 for 100 shares I bought. So I am okay with that. I am okay to lose this money, so I don't care. So I let the stock do what it does. I don't want to interfere. Because if the stock just go up a little bit, go down a bit, I exit. So why I put stop loss? It means it's ridiculous to put stop loss. It is as if you are doing a day trade. I am not doing a day trade. I am going for the trend. So I should give the stock some room to move up and down in order to make my money. Okay? This is what I always do. So let's go and see the questions. Wise man has said, "Have good evening, Kareem, and everybody else." Kareem, are you going to be having this live chat once every week of 2 weeks? No. I do it each week, but last week or the other week, I have some guests in my home, so it was very annoying to do the thing. But I will do it always on Saturdays at 11 as before. Okay, it's always at Saturdays at 11 p.m. Eastern time. Always I do the same. Okay. So, and wise man, you can send me an email if you don't find any notification. You can send me an email and you ask me as usual. Baba asking, why before earnings, let's say week or two, strong surge? This is just a generalization that you make. So I will give you an example. Okay, I will give you an example of earnings. Okay, I give you two examples. 1 and 2. Two stocks. A stock was going up, and then we have a gap up, so it makes more money. Let's say here $20, it goes to 25, and then the next day is 35. This is a gap up. A gap up. It means you will make a lot of money from this gap up, because 25 goes to 35. You make a lot of money. But sometimes you buy a stock, it's going down, and then you have a gap up here. Okay, gap up because of the good news or something. Now, let's say it was $20, it goes to $15, and now after one day it goes to $20. Just an example. So these two examples happens always. So you will never know that because it goes up, there is a gap up. Sometimes it goes up and the news was bad, like for Facebook, it goes down. And you can see the chart. Okay, let's I show you the chart. Facebook, for example. Okay, now Facebook was going up, as you can see, was going up from, let's say, 175, it goes to 187, so 10 points. But later it goes down from 187, it goes 179. So you see that? So although it was going up, but it got a gap down. So don't, in my opinion, as I always explain, okay, as I always explain, Baba stock, you should never predict and never take conclusions without knowing the criteria why the stock is going up and why the stock is going down. So don't predict because the stock is going up, you will have a gap up. Who tells you this? You see Facebook is going down although it was going up. Sometimes the stock is going down and then it has gap up. So you will never know. So this depends on the news. It depends on the people. It depends on the people who bought the stock after the news. Most of the time, if the news is good, the stock will have a gap up. Whatever is the stock price. So try not to make generalizations, to make conclusions like this, and you want to apply them, they will not work. For me, most of the time, if I buy a stock and there is earnings, I will stay. Whatever happens, happens. Because I can't change anything. And I'm not scared of the market. If it is a gap up or gap down, I am with it. Because I calculate my risk and I say if the stock goes down 10 points, do you accept them? I say yes. But if the stock goes up 10 points or 15 points, I say yes. So I am always yes with gap up or gap down. But for you, if you are scared, you can sell the day before we have the gap up or gap down. You should sell if you don't like it. So Baba stock, this is it depends on you, on your risk tolerance. Are you with the risk? Yes or no? Okay. So for me, I am always with the risk when I buy the stock. But I don't buy the stock because there is earnings. This is not a strategy. I don't do these strategies. Because if you want to do that, you should have a strategy for all the stocks that you buy on the earnings. Okay? You should have a strategy. Or you should follow the stock when there is the news. And then you buy or you sell. Okay? So it happens like this. Okay, so it seems that we are at the end of this session. Thank you very much for watching. Please, if you have another question, you should ask. For all you guys who wants to send me an email or to check my website, okay, you can go to my website or my email and send me an email or check my website for everything, and then you can send me an email, and I will respond mostly in a day, in the same day. I will most of the time I will answer my emails. Okay, so thank you very much for watching. Please stay tuned. If you have more questions, just ask. Yes, I'm sorry. I am sorry, Baba Stock. If I don't announce in the afternoon of Saturday, if I don't announce, most of the time I don't. Last Saturday I have some guests, so I can't do the live. And I was obliged not to do it. Okay, so there is a problem, but I am sorry for that. You can send me Baba Stock. You can send me on Friday or Saturday. You can send me an email if you don't see any notification from YouTube. You can send me an email and you say, are you going to do this tonight or yes, and I will give you an answer. Okay, so thank you very much and I hope you have got some information from this session. Thank you very much and see you next